All right, Malaysia's Islamic fund management industry is thriving with assets under management AUM reaching 263 billion ringgit as of mid-2025. Yet despite this growth, most Sharia investments remain heavily concentrated in domestic markets or single asset funds, limiting diversification and also global exposure. And StashAway aims to change that. Joining us on set is Wai Ken Wong, Country Manager of StashAway Malaysia, and also Khairil Anwar Muhammad Noor, Principal Masryef Advisory, to unpack the strategy and the Sharia screening process, and also what this means for the future of Islamic digital wealth management in Malaysia and beyond. Gentlemen, thank you so much for joining me this morning. Let's start with the StashAway first. Why did StashAway basically decide to launch, Shariah Global Portfolios now, and how does this fit into your overall strategy, especially in Malaysia?
Yeah, morning, Najib, and morning to the audience as well. This is something that StashAway has always wanted to do, because we launched in Malaysia in 2018, and then being Malaysian, we just know how big the Sharia market is. Malaysia is a world leader in Islamic finance, and I think that the market segment is big enough. I think for us to do it now, it's a reflection of how global of a portfolio or how global of an offering we can give to clients. It took some time for the world to come up with ETFs that was truly global, for example, sukuk and certain equities, for us to really put together a global portfolio, because we think that more Malaysians, and including Malay Bumiputra investors, do need to invest abroad. So we had to wait for the global industry to catch up with Malaysia's progress. So ultimately, we're really proud to bring it to Malaysia and, in a way, complete our product suite.
And also for Khairil, from Shariah Advisory side, why is there such a strong demand now for global Sharia compliant solutions?
Thank you, Najib. I think to begin with, the demand for global Sharia compliant solution is not new.
All right.
The demand has always been there. The Islamic investors, particularly, it's very much important for them to be able to invest in instruments which are Sharia compliant. What is more important now is that the availability of the instrument. The availability of the instrument which are Sharia compliant, like the ETF, only recently that we can see that there are Sharia compliant ETF which is being offered in the market. So demand has always been there. Market wants Islamic Sharia compliant products, particularly for the Muslim. And I have to say, this is not only in Malaysia, but also globally. There's always demand for Sharia compliant products. And market, even in the Western non-traditional Islamic market, like the Western market, the UK, the US, Australia, for example, the demand for Sharia compliant product is always there. Yeah,
very interesting. Of course, when we talk about investments in Malaysia, people would like to go to the safest place, what I would say. So many Malaysians, of course, already invest or heavily through it's either EPF for retirement or ASB in that sense, which are largely domestic focused. So how do your global Sharia portfolios basically complement these investments that they already have?
That's a good question, and I think something like EPF and ASB, they are cornerstones of all our investment portfolios and should remain that way. I think how we can help Malaysians is to diversify and globalize their investment portfolio. The truth is that Malaysia, while we are all very proud of the progress we have made, this is Bulan Merdeka after all, right? We have come a long way. We are still a small part of the global equity markets. So we are only around 0.2% of global equity markets. And I think as Malaysians, we travel overseas, we buy overseas products, some of us study overseas, we consume media that is from overseas. We are well-traveled people. So it's also fair that you invest overseas as well. And overseas provides good risk return. I think it's good to diversify your holdings. For example, the S&P 500 has returned 12% per annum on average. It is more volatile, but I think that 12% is a much higher return than a lot of people can get in the local market. So I think that people owe themselves the ability to invest overseas. And now with these Shariah Global Portfolios, you can do so in a safer way. we have put together many different asset classes, not just sukuk, but also equities from different regions around the world, also gold, which has been doing quite well. I think in this safe, diversified manner, we can help people invest overseas and not have to worry much to stock pick or to worry about exposure to a very risky sector. So I think we do it very easy way to complement ASB and your EPF.
But do you see that Malaysian investors becoming more open to the global diversification in that sense, or what does this mean for from the Shariah perspective as well?
Yeah. I think Malaysian very much open to invest not only in Malaysia but also outside. Yeah. I think the availability of Sharia compliance investment instruments enable Malaysians to diversify their risks. Not only to diversify, but to also look at opportunities for investment outside Malaysia, and also to be able to accrue probably better returns. But in any event, when it comes to investment, diversification is very important. And I think the demand certainly is there to help the Malaysian investors, to help the Sharia-compliant investors, to not only continue to align their investment with their belief, but also to diversify their investment instruments. And the good thing is, at the current rate, it's not just about diversification, it's about being able to afford it because of the smaller ticket size and lower cost in investing in global portfolio.
So this is the best option for passive investors in a sense?
Yeah. It's a very good option, I would say, to the passive investors. Yeah.
Okay. I want to talk about, because you mentioned about the return just now, 12 to 14% or that kind of numbers. Of course, higher returns would also comes with higher risk and all that. That's what at least people and investors would see, right? So but how do you balance the competitive returns and at the same time, managing the risk itself?
Yeah, risk in and of itself is not a bad thing if the returns are there to compensate for the risk that you take. Yeah. I think, for example, if we look at, let's say, FD in Malaysia, you're looking around 3%. Yes. Not much risk there. ASB around 5 to 6%. Also not much risk, very secure. Where you want to reach for higher returns, you need to be able to accept that risk. So first, that comes with knowing your own situation. Can you handle that volatility or not? And if you go into, let's say, a single stock, very, very volatile. Yes. If you go into just cryptocurrency, very, very volatile. That's why a portfolio really helps you navigate this volatility. You have assets like gold, sukuk, different types of equities to smoothen out the process. And we have found that our portfolios, historically, in terms of backtested returns, have delivered between 8 to 14% per annum over the last 3 years. So I think those returns speak for itself in the sense that, yes, you take higher risks, you are investing globally, but at the same time, the returns are there to compensate. Interesting fact as well, we found that, I mentioned S&P 500 earlier.
Yes.
We have identified the Sharia version of that S&P 500. And if you compare that Sharia index to the conventional S&P, the Sharia index outperformed. It outperformed by 48% over 10 years. So it shows that even, as a Malay Bumiputra investor, if you're investing according to your faith and your principles, you should not look at accepting lower returns. Sharia investments are on par, if not, in some cases, like I just mentioned, better than the conventional ones as well.
Yeah. I remember when EPF introduced the Sharia saving, a lot of people jumped into that, and then of course the first year, the second year, the return was a bit lower than the conventional one. But now it has a competitive edge in terms of that because it has its own AUM. But how do you see the concern that the Sharia compliance investment and all that would give lower returns? How do you answer that to investors watching now?
I think if you think about asset selection, and then if you put a Sharia view on things, a parameter on things, there's certain sectors that you cannot invest in. And obviously we all know the main ones, but one big one here is you cannot select banks. And banks are, financial institutions are really big part of any institutional investors' portfolios, right? Because of the dividends that banks could give. So if you exclude that, you have to look at returns elsewhere. But because of excluding all these other things, somehow you still get returns that are on par or better. So I mentioned S&P 500 Shariah index earlier. It does give you better returns if you compare it to the conventional S&P 500. But also when we look at global equities over the last 3 to 5 years, the returns is at 9%. So global equities, Shariah and conventional at around 9%. So there's no sacrifice in terms of returns. There's no lower returns when it comes to Shariah. So even as a parameter, a limitation to investing, you're not getting lower returns.
To those investors who's really concerned about the halal level in that sense and for this product, can you walk us through in terms of Shariah screening process for the ETF and how do you ensure that the ongoing compliance?
Okay, sure. The Shariah screening process, first of all, we look at the sector. The business sector, for example, like what I can mention, banking, conventional banking particularly, which is based on interest or riba, which is already excluded. Banking, alcohol, pork, or any other entertainment, for example, this will have to be set aside because these are non-compliant business sector. Then, apart from that, we also look at the business activities also, looking at the income, the source of income of an entity. For example, if we were to apply, for us, when we look at Stash, we have two methodology to do the screening. Number one, we use the AOC standard, which is a globally recognized standard. And we also adopt Securities Commission standard. So from income perspective, I was talking about income just now. The income based on non-compliant activities, for example, the interest income, should not be more than 5%. So this will have to be excluded from the approved equities or approved investment instruments. And then we also look at the financial screening, the financial ratios, where debt, which is based on conventional debt, should not be more than 30%, as well as what we call cash holding, should not be also more than 30% of the market capitalization of the entity. So it is actually a very comprehensive screening methodology. Having said that, for the purpose of Stash, because of the investment in ETF, the investment in ETF, one ETF may have multiple equities within the ETF itself. So the process is actually much more rigorous because we have to look at the individual entity. But the good thing is, for StashAway, StashAway have already selected ETF which are already compliant, which has already been approved by other Shariah Advisory. So it's a lot more easier that way. Otherwise, the process to screen the ETF will be, a long process. It can be a costly process.
Wai Ken, you mentioned just now about the return from the S&P 500. It's very interesting and a high number, but given the current uncertainties, I would say, we've seen a lot of market movement, especially when Donald Trump makes any announcement in all that sense. But with the global uncertainties and also market volatility, how will you ensure investors to stay confident in terms of having a Shariah-compliant ETF and committed to Shariah global portfolios?
That's a really good point, right? Because if you venture abroad, it comes with more risks, geopolitical risks, economic risks, business risks, all of that wrapped into one. And we're at a point now where markets are volatile because we have a very volatile US president.
Yes.
Just last week, because of Fed Chair Jerome Powell's dovish comments, markets did really well. And then when Donald Trump wanted to interfere in terms of the leadership at the Fed, then markets took a hit. So I think expect more volatility going forward. I think this is something that is not new. We had wars, in the last few years as well, tariffs earlier in April. But still, markets are at all-time highs. And there are other asset classes that also shine in this volatile times. Gold, for example, has had almost 3 years now where it has more than 20% returns. So that's where diversification comes into play.
Yep.
That's where long-term investing comes into play. It's not something that you invest and hope that immediately you will become very rich. It's not a get-rich-quick scheme. It's something that you need to invest on in a yearly basis, a longer term, to meet your financial goals. So if you're a little bit more patient, a little bit more long-term minded, I think you would be able to ride out the volatility. And financial news also can be distracting. I think there's sometimes too much financial news and certain things can be overblown. So people need to understand markets and understand what they are investing in, but not be too, not panic at the wrong time and sell, for example, at the wrong time. It takes education, it takes exposure, but over time, I believe that Malaysian investors will get used to this kind of investing, as is the case with other investors who invest globally. And those who are patient and, shall I say, also a little bit more brave, can enjoy those returns. Those 12% plus returns don't come without a cost. That's why I always mention risk return, not just sekadar return only.
Right. All right. Wai Ken and also Karith, thank you so much for joining us this time. That's all the time that we have. And it's a very interesting topic. It requires a lot of time to discuss about this.